All right, what's going on, guys? It's Ricky here with TechBud Solutions. Today it is September 20th, and it is the FOMC meeting. In about 13 minutes, the FOMC rate decision should be released, and we should be catching the market's reaction to this. So I really do appreciate you guys taking time and tuning on into my live session. Let me go ahead and start sharing my screen so you guys could see exactly what it is that I'm looking at. So I'm looking at SQQQ. This was a trade that I took today during my live trading session with the LPP team. I've already closed it out just so you could see. I have my one lucky share. I have no open position on TQQQ other than my also one lucky share. I didn't trade this one today. I only traded SQQQ. All of my entries and all of my exits were all caught within today's live session. And it was during this reversal where it obviously, it was showing signs of a descending pattern. It was a very similar setup to yesterday. And that's what I kept talking about. We broke above the moving average, we broke above the EMA, and then began indicating signs of higher highs and higher lows. It was a beautiful overall setup. And then we hit our resistance here at 1874. And if we look at QQQ, very easy to see the previous support range that we've had here based off of previous patterns. We saw a lot of consolidation at yesterday's close. We consolidated there for a little bit, but again, tech is just showing a lot of signs of weakness. I would say this is kind of the frustrating part, and I 100% agree with a lot of you, where why is the market selling off today, right? I mean, I'm working with the market. I'm not here to be biased of like, yeah, market should be selling off, or yeah, market should be going up. Does it make sense that the market could potentially go up because of how high the expectation is for the Federal Reserve to pause rate hikes, right? For those that are unaware, this FOMC meeting is for the Federal Reserve to decide, are we going to be raising interest rates, making it more expensive for us to borrow money? Are we going to be pausing, meaning nothing new gets added or removed? Or are we going to be cutting, meaning taking away, right? Reducing our interest rate, making it less expensive to borrow money, right? According to this Fed rate monitor tool from investing.com, of course, it doesn't have to be 100% accurate, but there's a 98% probability that the Federal Reserve is going to pause, right? So if that is the case, why is the market selling off? Why is the Federal Reserve pausing, causing the market to sell off? And this is one thing that we've talked about before. It's kind of like earning reports. Things get factored in advance in the stock market, right? When it comes down to the real estate market, it's not as real time. If interest rates begin to go up, you begin to see demand begin to shrink as time goes on, right? It takes time for those dominoes to move. The stock market, there's a very common saying, any reaction tends to be an overreaction in the stock market. And I think that's what we could be experiencing, where the market overreacted originally in the way that it originally gapped up due to specific expectations. But as of right now, I don't think the market's doing anything surprising. We've been consolidating within the same support range, same resistance range for QQQ. It's a 1-for-1 for NASDAQ. And you can see that it's had a common support range right around 368, and it's had a common resistance range right around 378. So for the past 2-3 weeks, we've really just been consolidating, not really making progress on the upside, not really making progress on the downside. The only thing that we do have to show is that we are trading below the moving average and we are trading below the EMA on the 1 hour time frame. But then when we look at the 4 hour, again, it's indifferent, right? No one knows exactly what's going to happen. No one knows exactly what's going to be reported, of course, except for the market makers, right? We have to give them, let them know. But one of the things that I love to do, and please, this is just my opinion. This is just the way that I like to trade. Some people were asking that might be a little bit newer to trading. They're like, Ricky, why are you not in a trade right now, right during the FOMC meeting? Because I announced that I was going to reduce my position size and leave myself with no open position other than my one lucky share. And it's because I've been burned enough, right? I've had enough of an experience where, like, when I try to predict something, I do have a chance of being right, but then I also have a pretty solid chance of being wrong. So instead of hoping for something to happen, I'm just taking a chill pill, taking a step back, staying cash, meaning no open trades. And if the market begins to go up, then I'll go with the market. I'll go long on TQQQ. If the market begins to go down, then I'll begin to short the market by going into SQQQ. Very simple, right? It's a very boring way of trading, but it's simple. And instead of hoping for something to happen, I just prepare for something to happen. I like to keep my trading simple. That's all I have to say about it. It might be boring for some of you, but why change something that isn't broken, right? Why change something that doesn't need to be fixed? Obviously, the market's always changing and adjustments always have to be made, but this is exactly how I like to trade with my LPP team. So just a heads up, again, we are running our biggest sell. The link should be active. It's the second link in the description down below. We have 8 minutes left until the FOMC rate decision is released. And then 30 minutes after, Jerome Powell should be going live, giving his little script of a speech. He says the same thing over and over again. And then he begins to answer questions. So I just want to say, I appreciate you guys choosing us to tune on into our live stream. I really hope that you learned something new. And if you have any questions whatsoever, shoot me a message within the live chat. I'll try to the best of my ability to answer any questions, especially before the FOMC begins. But you do have to be subscribed to the YouTube channel. So I hope that it earned your thumbs up. Let's see if we can get this video to over 1,000 likes. Make sure you subscribe and turn on your post notifications, because if not, YouTube will unfortunately not notify you when we go live. So, all right. Where can I get that super trend indicator? It's not super accurate. It's still something that I'm testing out, but I do have a video on it on YouTube if you want to check it out. Just type in super trend and then Ricky, and it should be able to pop up on how I set it up on the Webull trading application and my settings. So I hope that helps. Friendly reminder, I am using the Webull trading application. Let me make this very clear. You do not have to. They do have a sign-up bonus right now. So it's the 5th link in the description down below. And that means that if you use my link and deposit at least $5 with your initial deposit, you'll earn up to 12 free shares. It's the application that I use every single day with my LPP team, and it's the application that I trade on every single day when I do take a trade, right? So, yeah. All right. And there it goes. NASDAQ market beginning to pick back up. I'm going to keep my screen on NASDAQ. We have 6 minutes left until the actual FOMC report is released. I think we all have a pretty decent understanding of what is going to get announced. But I want to ask you, which way is the market going, right? That's the bigger question. Who cares about what gets announced, right? We all know that we have a pretty high expectation that the Federal Reserve is going to pause. The question should be, how is the market going to digest that? Is the market going to go up or is it going to go down? So bullish or bearish? I want to see what you guys think. We're bearish as of right now. Actually, we're break even. What a beautiful day, right? Break even right before FOMC. Let me know what you guys think in the live chat. You should be able to see it right now. Make sure that you cast your votes. You guys have 5 minutes before the FOMC rate decision is actually let in. So why'd you switch from Thinkorswim to Webull? Laura, I have a video on it on YouTube. I personally think Webull, they have constant updates coming out. To me, they're really putting in a lot of effort to becoming, the top dog. And obviously they have a huge demographic to gain. And I really like to, might just be me. I might be biased, but I think aesthetically looking also, it looks a lot better than it does for TD Ameritrade. And in my opinion, it just, again, just gets the job done. And the bells and whistles that they offer, the different features that they offer, they're definitely trying to innovate in a market that's been very stagnant, in my opinion. You guys let me know what you think. Ricky, is the pause already priced in? Leonardo, that is normally what is expected, right? Why do markets go up or drop right before something is released? It's because things get factored in advance. Now, again, that doesn't mean that there can't be a reaction after. And that, right? If I was so certain, because in a perfect world, we have a pretty high probability that the Federal Reserve is going to pause. If I know that, a pause is not a bad thing for the economy. It's decent. It's not bad. So it's not that things are getting worse. They could be getting better, right? but we still don't know how the market's going to react. And then on top of that, Jerome Powell is going to speak. And depending on his tone, it will determine if he's more hawkish or more dovish. And then that will also cause a second reaction, right? Two reactions that I'm focused on today. One is going to be in the next 3 minutes, less than 3 minutes, almost just 2 minutes. That's the rate decision. The second part is when Jerome Powell speaks and he begins to answer questions. And it's based off of his tone that will determine if the market will go up or if the market will go down. Imagine having that much power, right? Because when we think about, oh, the market's just moved 1 or 2%, you're moving 1 or 2% of trillion-dollar companies, right? That's pretty dope. JP with the power. People hit that thumbs up. I appreciate that. Thank you. Thank you. Juno. All right. Jerome will pass out on stage and I'll buy 500 shares of Apple at $20. Jesus. That's not a nice thing to say. I like that. Doesn't matter what I think. I'm setting up a stop loss. I love that, right? That's if you do have an open position and that's how you choose to trade, right? Your job's not to avoid risk. Your job is to manage it. And I think that takes a lot of discipline. So I'm very happy to see that that's the way that you're approaching it. Okay. So in the next 2 minutes, literally 1 minute left until the FOMC rate decision is released. I do want to remind you, again, you don't have to, but I work with one team and one team only. I host live sessions like this every morning at market open. You get to see my entries, you get to see my exits, you get to hear my thought process behind every trade I take within that live. It's one-time payment, lifetime access. We're running our biggest sell right now. It's the second link in the description down below. So if you ever want to be able to watch me trade live and also get access to our A to Z video lesson library that's designed for complete beginners, again, the second link in the description down below. And if you have any questions before signing up, then feel free to send me a direct message via Instagram or via Discord, and that's the first or third link in the description down below. So without further ado, you have 22 seconds left to do something about your position or forever hold your peace because the FOMC rate decision is about to get released. Whoa! I'm like Dr. Seuss over here. All right. Doesn't mean that your stop will work. A stop loss does get filled. A stop limit is different. So stop loss does get filled. I don't know what you mean by that. And there it goes. QQQ selling off. Wait, let's wait. This is something that we expected, if I'm not mistaken. It's going to be, let me end the poll here, just making sure. So 59% bullish. And here it goes. Again, there's a lot of fake outs. This is probably not a day where beginners want to trade because volatility is super, super high. But check this out. This does not surprise me that all in one candle, we made new lows and now we're picking right back up. Nope, it looks like the sell-in pressure is going to try to continue. Let's see if it does. 368, 368.33. I missed out on that move already. I feel like it's going to try to recover right back down to that EMA and that moving average. I'm just trying to be a little bit more cautious. And again, just so you can see, I only have my one lucky share. Obviously, in a perfect world, if I knew that the NASDAQ market was going to sell off, I would, of course, open a position. That would have been a quick 1% trade, but it's okay, right? We're not perfect. We're not here to pretend to be. Our job is not to avoid risk, just to manage it. And right now, it's just a little bit too risky for me. So, yep, the pause was announced. So here it goes. All right, 1 week, 6 days, 23 hours. Looks like it's still coming in. There it goes. New lows, lower highs. Wow, man. This is a tough day for the bulls as of right now. But remember, I do just want to send out that reminder. Just because the market is selling off right now, it doesn't mean that the market's going to continue to sell off. When Jerome Powell speaks, it has been a pattern that the market shifts direction when he begins to speak. If he begins to have a tone of being very dovish, markets can quickly recover. You never want to bet against the bulls or be greedy when the overall markets are very, very bullish still, right? And again, I'm telling you this as someone that's shorting the market, so there's no benefit for me to want the market necessarily to go up, but I'm open to it, right? I'm open to anything. Just trying to look out for our beginner traders. All right. I appreciate that, Yanel. Thank you, thank you. So I'm not going to be doing any breakdowns right now. I'm trying to see if I can set up for my next trade. So if you have specific questions that you would like to ask me, right now it's just not going to be the time. I'm just trying to see if we're going to begin to show signs of a support and try to recover. Let's see if we do. I want to see if we enter TQQQ, right? Nope, it's looking bearish. Are we going into TQQQ? Logan, I don't know what you're doing. And I don't care, right? You do you, I'm doing me. Please do not copy me, right? That's not the point of these live sessions. I can be wrong. I've been wrong many, many times, but my job is to manage my risk, not yours. We all see value in different ways, so please do yourself a favor and do not enter a trade in which you cannot tolerate. I don't know what other people here say on YouTube if they try to encourage you to jump into the same trades that they do, but I think that's naive and that's not the way that I want to preach. All right. Still selling off. This is in favor for the bears. Yeah, for those that are unaware, the Federal Reserve did pause, meaning that they did not raise interest rates. So this is why, this is what was expected. So just a little heads up on that. NASDAQ market selling off, SQQQ gapping up. I like it, I like it. This is a super risky trade. I like how oversold it is. I like the RSI, I like the MACD. I'm entering before confirmation, 500 shares. It's not a very large position. It's about 20K, right under 20K. And I'm okay with that, right? For those that are unaware of how much I trade with, I normally trade with my full position of about $500,000. Please do not compare your position size to mine, right? We all trade at different levels, and that's fine. So just because I can tolerate some form of risk doesn't mean that you need to. Just making sure I remind our beginners out there. I've been wrong many times. You take a trade because it makes sense to you, not because it makes sense to me. Here it goes, still showing signs of progress. One of the things that I love about managing my position size is by keeping it small, I'm able to tolerate more of the pullback, right? Making it easier for myself to manage risk if I need to. SQQQ retesting previous highs, 1889. Looks like we're getting close to that same $19 resistance. Again, for those that are unaware, I mean, everyone that's part of LPP should know, right? We trade these two pairs very often. $19 is a very common resistance range. Obviously, today's a very significant day, but we haven't been able to hold above $19. Now, can today be the day? Of course, today anything can happen, but we'll see. So still showing signs of a potential resistance there. So I'm excited. Beginning to show signs of a potential support here, adding an additional 1,000 shares. So that's about $39,000, okay? Beautiful, beautiful, beautiful. So nowhere near bullish, legit no cuts in interest rates for all of 2024. I don't think you understand, Johnny. The stock market trades based off of not things getting better, but things not getting worse. We experienced this in 2022 to 2023. If things are getting worse, then yes, markets do sell off. If things are not getting worse, then technically they're getting better, right? It wouldn't surprise me at all, right? For you to say that market's not bullish. We've had one of the most bullish years for 2023 after a really nice comeback from 2022, right? Very aggressive sell-off. We can go to QQQ and see how significant this has been. Imagine calling this not a very bullish time when we went from overall lows of 255 to overall highs of 386. That is with QQQ, NASDAQ, a 50% return. If you look at the most valuable company that's publicly traded, right, that's Apple. This is all in 2023. From overall lows to highs, that was a 55% return. Imagine that. You live in a world where you could have made 55%, not by investing in a penny stock, but by investing in the most valuable company that's publicly traded. I just want to remind you that your assumptions, my assumptions are not facts, right? At the end of the day, the stock market can choose to do whatever it needs to do. So remind yourself, yes, you value your opinion, but understand that your opinion, my opinion, anyone's opinion can always be wrong. The market can do whatever it is that it wants, and that is why at any time, right? That is why I choose to stay cash. I have very strong opinions. Do I think that the market should be thriving right now based off of recent patterns, based off of having this type of, interest rate that we do? No, not necessarily. Of course, I would like markets to thrive when it makes sense, but it doesn't matter what I think. It matters what the market is showing us, what it's telling us. And markets have been bullish. Trust me, I've been shorting the market more than anyone else I know, right? I have a lot of fun with it, but I always try to respect the bulls. The only people that I don't respect are AMC traders. All right? Is that cool? Can we say agree? The only people I'm disrespectful are AMC bag holders. That's an inside joke for those that get easily offended. There we go. Happy to see you guys in the live chat. I knew I needed to say something to get you guys riled up. We don't have any of you AMC traders here, do we? If we do, let me know what you're buying so I can start to short it. Yeah, again, I want to see everyone win. I want to see everyone win except for AMC traders. That's all. I don't care if you're long. I don't care if you're short. If you're going long on the market, short on the market, if you're an absolute beginner experience, the only people I want to see crushed are AMC traders. Just kidding. I don't really even care for them either. It's just more of an inside joke. It's more of a joke, All right. AMC going to 1,000. Yeah, after it goes through a 1 to 100 reverse stock split, you're right. It's already gone through one stock split and it's lost 75% of its valuation just from that. So maybe it will go to 1,000, but they'll have to reduce the shares by 90%, That'd be a good way to hit 1,000. That's going to be the squeeze they've always been waiting for. But that might be too technical for some AMC traders to understand. They're like, what's a reverse stock split? Hi, Remy. Remy, what's my name? That's my daughter. Rachel. Oh, boy. That is too good. Jerome Powell speaks in the next 19 minutes. Don't worry. I got you. We'll be hosting that live stream, okay? American Airlines? Yeah, where's American Airlines right now? $13. It's still not ready for me. Is American Airlines indicating signs of an uptrend? Nope, it's still selling off. It's looking like AMC right now. Why would I want to buy that? Ooh, the shade is real. I'm the real Slim Shady. Just kidding. Jesus, I need to stop with these dad jokes. I understand they're not funny. Adding a little bit more, we're showing more signs of consolidation. If we begin to show progress on the downside, I'll quickly reduce my position size, mitigating my risk, okay? So just so you understand my thought process behind this trade. We're oversold, we're beginning to show signs of a support. It doesn't mean that it has to recover, and if it begins to show progress on the downside, I'll quickly cut losses. If it begins to recover, I'll really begin to step on the gas. Make sense? I lost a lot with AMC. I'm sure you did. A lot of people did. who was one of the only people that was not scared to make videos about why I'm okay with day trading it and selling it and not holding it overnight. And you should have seen the names that I was called during that whole thing. They did not like me. None of those Reddit traders did, but a lot of them actually then later, as the truth came out about AMC and what happened, they're like, I could see that Ricky was just looking out for people that have a little bit less experience. And that's all it was, right? They lacked experience. They didn't understand my why on why wouldn't I want to hold this. But I get it, right? My job's always just the way that I view it is I'm not here to tell you what to do. I'm just trying to look out for you, right? I'm never going to tell you where to buy a stock or where to sell a stock. I'm not here to sell anything like that. I just want you to be aware of the risk. That's all. As long as you're aware and you still choose to take it, you're an adult. You can do whatever it is that you want. But the part that I don't like is when people aren't aware of the risk that they're taking. And it's just because you're naive, right? You lack experience, and I'm just trying to make you aware of it. But it's something that comes with time. So yeah, how many people do we have in here? 4,000 people and 793 likes. I thought we would have a little bit more likes than that. I'm a little bummed. I guess they don't like me. Dude, I need to stop with these jokes. Guys, get me to 2,000 likes and I'll stop the dad jokes. Get me to 3,000 likes and I'll get you a real good one. That's all I need to say to get you guys. Oh, wow. You guys are horrible. Obviously, I appreciate the likes, but you guys are pretty much telling me to shut the heck up, you know? All right. One of the things that I want to remind you is we're not actually showing signs of a reversal yet, right? We're not showing signs of progress above the EMA. So just a heads up, this is not confirmation. So if you're asking the question, why am I still not adding more to it? I've seen it many times where we test the same resistance, which is $39 right now, and then we just get rejected back again. Why would I add more money to something that is not indicating signs of growth, right? I'm ready for it. I would love to add more. I'll add 3,000 shares, which 3,000 shares should be equivalent to a little bit over six figures. I think it's about 116,000. But again, I want to have a why. I want to have a reason why I'm adding more to something. And if I don't have that, then again, I should not be adding to it. What's going on? I'm sleepy? What does that even mean? What are you saying, Justin? I can't see all the messages. He's not even talking yet? No. He speaks 30 minutes after 2 p.m., right? 30 minutes after 2 p.m. Eastern time, which means 11:30 a.m. Arizona time. 30 minutes is 30 minutes anywhere. It's 11:16. So yes, he is not yet talking. That is a fact. All right. I'm just going to set my stop just to make sure stops will get filled. That's fine. Bada bing, bada boom. My job's not to avoid risk, right? Our job is to manage it. I want to make sure that when you're trading, you have these rhetorical sayings in your head. How many of you guys ever hear me in your head when you're trading? Wait for confirmation. No progress on a trade. Any open position? Anytime? No? There's just our LPP traders that hear me in their sleep. I hear the voice. Absolutely. Double top. Here it goes. Testing EMA. Let me see if I show signs of progress. Come on. 13 minutes left. Tesla is on one though. Tesla's one of the only ones. Tesla and AMD are one of the only tech companies that are in my watch list that are in the green. We got Nvidia selling off, Google selling off. Everything still looks pretty bearish. Still trying to show signs of a recovery. All the hope is going to be on Jerome Powell. What do you guys say that we play it safe, close out the position slightly in the green, and then just wait until he begins to speak? Is that a boring way to trade? It might be, huh? Am I just getting that old? There it goes. Getting rejected, same thing, getting rejected off that EMA. No signs of progress beyond EMA. The right way to trade. Sounds like you're protecting your future self. T. Rogers, I like that. LVP for life. Gonna get that tattooed small though. Victor, please do not, man. Please do not. Profit is profit. Do another GTR giveaway. My favorite car, Laura. We're setting up for our M4 giveaway. Who's excited to enter that? We have 11 minutes left. And again, before Jerome Powell speaks. But yeah, our M4 giveaway starts October 1st. I don't know if you guys knew this, but our previous giveaway winner just bought a license plate frame. He spent $10 on the site and he walked away with $50,000 cash. Just saying, right? We have a third-party sweepstakes company that chooses the winner, right? So we're licensed and bonded. We're hands off on who chooses the winner. You guys can feel free to check it out, but we are setting up for our M4 giveaway. So nearly 700 horsepower after downpipes and tune and full exhaust. Hope that you guys are ready for it. 2021. You better believe it. Your ex-girlfriend's going to want you back. Just kidding. A car won't change that. Who are you trying to kid? I'm just kidding. Oh man. I maybe should shut up. Wait, is my microphone cutting off? It's because I'm talking too much crap. Tuss. Tuss. All right. Did you guys hear my joke, or is that what's going on in the live chat right now? Oh. I mean, let's be honest. If your girlfriend just wants you back because your girlfriend or boyfriend, right? Because anyone can win. Or I don't know what they identify as, but at the end of it, they want you back just for the car, then perfect. Take them back. You'll take them back. Stop trying to act humble. No, I won't get you back if you just want me for my car. Shut up. You will. The winner did not select the GTR. The winner selected the cash. So they won $50,000. Are you still holding? Yes. I mean, you could see my position right here. Can you guys actually not hear me, or are they trolling me? Is this what happens to other streamers? They're just being trolled with the whole time. All right, watch for the rejection here. If we begin to show signs of progress, again, this is definitely not the best sign. I mean, we're showing signs of higher lows here. Here it goes, testing. Come on, buddy. Jerome Powell is about to speak in 7 minutes. Do you not know that? Break above the EMA so I can lock in profits. Justin, can you hear me okay? Let me know in the live chat because I feel like I'm being trolled. Can you hear me okay? Or is there actually an issue with the microphone? Because if so, I don't know what to do. Oh, mic is fine. Yeah. For those that are saying that it's my microphone that is out, it's probably your Wi-Fi because you still got some type of Ethernet cable, or what is it? Dial up. Man, my jokes are not that good. I tried to like be snarky back. It just didn't work. Your Wi-Fi sucks. That's probably why you can't hear me. I don't know. I'm not that. I try to be quick with it sometimes on these live streams. I feel like I have some pretty good jokes during our live sessions with the LPP team. Let me know what you guys think in the live chat. If you're part of LPP, from 1 to 10, what do you rate my jokes at? I feel like they're pretty good. My analogies are A1. I know they are, right? I need to give examples of the different trades I'm taking, of why I'm waiting, the importance behind it, different setups, all that stuff. So analogies, 10 out of 10. Jokes daily. So if you don't want to join LPP, if you have a low tolerance for bad jokes, then yeah, I'm probably not going to be your guy. And I respect that. I get it. But it's all good. But if you like dad jokes that are extremely bad sometimes, if you like to have a good time every morning at market open, good days, bad days, you get to see my good trades, my bad trades. Click that second link, save $175 off. It's the biggest discount that we will ever offer you. We offer no bigger discount than that. And yeah, we'd love to have you as a part of the team. It's a one-time payment, lifetime access, daily live trading sessions, A to Z video lesson library, and you get access to the TechBuds HQ anytime that you want to come visit. Damn, this guy's kind of cringy. I feel it. Trust me. I know. Sometimes I can be. I try to be funny, but I feel like I'm getting a little older. It's harder for me to be naturally funny, right? You young people, it's easy. You're witty. I sit in front of a screen all day taking these trades. But good thing I don't make my money off of telling jokes, right? I'll leave that to you. Justin, they keep saying my microphone isn't working. Is that true? All right, here it goes. Still indicating signs of an uptrend. As you can see, I reduced my position size just a little bit. There it goes. The bulls are coming back. We have 4 minutes left. I'm going to reduce my position size once again. We're approaching the moving average, right? NASDAQ market has been descending. So when in doubt, something we all need to learn about is pull out. And there it goes. Reducing position size up 1,900 on the day on TQQQ. And I am up 67 6,700 on SQQQ. Oh man, that wasn't even intentional. Boy. There it goes, getting rejected off that moving average. I'm glad that we reduced the position size slightly. Again, there is obvious indication of this descending pattern for NASDAQ. For those that are unaware, NASDAQ market has not been too bullish today, other than when the market opened. We've been showing signs of a descending lower high, lower low. So why was I so quick to sell? Well, that is my exact reason why, right? FOMC meeting hasn't even begun. And that's kind of like when the big move is going to happen. FOMC rate decision was already released. Jerome Powell hasn't even started to speak yet. He speaks in the next 3 minutes. I will be live streaming that. But again, I just want to make sure that I mitigate my position size. One of the worst things that I can do is get very greedy, get very confident that, oh yeah, this thing's going up. It's going to continue to go up. But no, How many times if you've ever traded FOMC, how many times have you been burned because when he begins to speak, direction changes very quickly? It sucks, right? But we will only know that if we've experienced it. So that's why I'm here, just to remind you that we have seen it before. So I hope that you don't take that as me telling you what to do. I will never tell you what to do, but I'm just trying to look out for anyone that's just getting started, right? Share your screen all day, every day. This is what I do every day with the LPP team. So it is exclusive just to them normally, every morning at market open, but you get to see my entries, you get to see my exits. So imagine experiencing something like this every morning. Like today's live session was really good. Some days when the market's not the best, they're boring live sessions, right? I'm not going to sugarcoat it, but I show up every day. I try to. I work with them every day for 30 minutes to an hour, and we try to make the most out of what is being presented. And that's all I feel like I can do, right? I try to do my best each day. Some days when market's very good, we kill it. Market's choppy, it's a boring one, but it's okay, right? Our job is just to show up regardless of that case. I didn't realize you went live yet. It wasn't posted. I did post it on Discord. What do you guys think? I'll let you guys decide. Should I sell my position on TQQQ right now or keep it open? I'll let you guys decide. What do you think we should do? So it's already showing signs of a resistance here, right? A potential pullback here, so something to be aware of. If we don't show signs of progress, remember, no signs of progress to any open position is a position that's open to risk. Watch this. If it breaks below EMA, that's not a good sign. And there it goes, breaking below EMA. I would close. Yep, that's what it looks like. It looks like it might be in our best interest to at least reduce it a decent amount, right? I'm going to sell half of what I have left. All right. All right. You guys can hear me okay? All right. I think it's when I keep turning my head. That's what I'm being told. So I'll try to not move my head. Diamond hands. Here it goes. Already beginning to pull on back. Is this in favor of SQQ? Oh, and Jerome Powell should be speaking. Let's go ahead and tune on in. All right, I'm going to hand over the microphone to JP.
My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We've raised our policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Looking ahead, we are in a position to proceed carefully in determining the extent of additional policy firming that may be appropriate.
Reducing position size.
Our decisions will be based on our ongoing assessments of the incoming data and the evolving outlook and risks. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. And so far this year, growth in real GDP has come in above expectations. Recent readings on consumer spending have been particularly robust. Activity in the housing sector has picked up somewhat, though it remains well below levels of a year ago, largely reflecting higher mortgage rates. Higher interest rates also appear to be weighing on business fixed investment. In our summary of economic projections,
Testing
our
5-minute moving average, just a
many
heads up.
participants revised up their assessments of real GDP growth, with the median for this year now at 2.1%. Participants expect growth to cool, with the median projection falling to 1.5% next year. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 150,000 jobs per month, a strong pace that is nevertheless well below that seen earlier in the year. The unemployment rate ticked up in August, but remains low at 3.8%. The labor force participation rate has moved up since late last year, particularly for individuals aged 25 to 54 years.
Lack of progress.
Nominal wage growth has shown
Here
some
we go.
signs of easing,
New highs.
and
Come
job
on,
vacancies
come on,
have
come on.
declined so far this year. Although the jobs to
Reducing
workers
position
gap
size.
has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebound,
I am fully out of my position.
easing upward pressures on inflation.
One lucky share.
The median unemployment rate projection in the SEP rises from 3.8% at the end of this
Inverse.
year to 4.1% over the next 2 years. Inflation remains well above our longer run goal of 2%, 4% over the 12 months ending in August,
Look at that retracement.
and that excluding the volatile food and energy categories, core PCE prices rose 3.9%.
Beautiful.
Inflation has moderated somewhat since the middle of last year, and longer-term
Adding
inflation
more.
expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets.
Testing moving average.
Nevertheless, the process of getting inflation sustainably down to 2% has a long way to go. The median projection in the SEP for total PCE inflation
Beautiful.
is 3.3% this year, falls to 2.5% next year, and reaches 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for
Watch
those
for the
least
rejection
able
at
to meet
EMA.
the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning
Watch for
inflation to our
support.
2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points. We see the current stance of monetary policy as restrictive, putting downward pressure on economic activity, hiring, and inflation. In addition,
Big push.
the economy is facing headwinds from tighter credit conditions for households and businesses. Range for the federal funds rate at 5.25 to 5.5%, and to continue the process of significantly reducing our securities holdings. We are committed to achieving and sustaining a stance of monetary policy that is sufficiently restrictive to bring inflation down to our
I like that,
2% goal
Vincent.
over time.
Congrats on your 4K.
In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate
Same
will be
resistance range.
5.6% at the end of this year, 5.1%
QQQ.
at the end of 2024, and 3.9% at the end of 2025. Compared with our June summary of economic projections, the median projection is unrevised for the end of this year, but has moved up by 0.5 percentage point at the end of the next 2 years. These projections, of course, are not a committee's decision or plan. If the economy does not evolve as projected, the path of policy will adjust as appropriate to foster our
Tested
maximum
moving
employment
average.
and price stability goals. We will continue to make our decisions meeting by meeting based
Yep.
on the totality of the incoming data
This
and
is
the
a script.
implications for the outlook for economic activity and inflation, as well as the balance of risks.
Be careful.
Given how far we have come, we are in a position to proceed carefully as we assess the incoming data and the evolving outlook and risks.
Big push for the
Real
bulls.
interest rates
Watch
now
for
are
new
well
highs.
above mainstream estimates of the neutral policy rate. but we are mindful of the inherent uncertainties in precisely gauging the stance of policy. We're prepared to raise rates further if appropriate, and we intend to hold policy at a restrictive level until we're confident that inflation is moving down sustainably toward our objective. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial
Let's
developments.
go, baby. Come on.
We remain committed to bringing inflation back down to our 2% goal and to keeping
What the heck? JP.
longer-term inflation expectations well anchored. It's essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at
Watch for the
Fed will
market
do
once he
everything we
stops
can
speaking.
to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
All right, let's see what the market moves based off of these questions. Remember, it's his tone. Is he hawkish or is he dovish?
Financial Times. What makes the committee inclined to think that the Fed funds rate at this level is not yet sufficiently restrictive, especially when
Colby Smith.
officials are forecasting a slightly more benign inflation outlook for this year? There's noted uncertainty about policy lags. Headwinds have emerged from the looming government shutdown, the end of federal childcare funding, resumption of student debt payments, things of that nature.
So I guess I would characterize the situation a little bit differently. So we decided to maintain the target range for the federal funds rate where it is at 5.25% to 5.5%, while continuing to reduce our securities holdings. And we say we're committed to achieving and sustaining a stance of
Consolidating right
monetary
now.
policy that's sufficiently restrictive
That's
to
not
bring
good
down
for
inflation
me.
to 2% over time. We said that. But the fact that we decided to maintain the policy rate at this meeting doesn't mean that we've decided that we have or have not at this time reached that stance of monetary policy that we're seeking.
That's good.
If you looked at the SEP, as you obviously will have done, you will see that a majority of participants believe that it is more likely than not that it will be appropriate for us to raise rates one more time
That's not good.
in
That's
the two remaining
hawkish.
meetings this year.
Let's see what the market takes
Others
that as.
believe that we have already reached that. So it's something where we're not making a decision by deciding to about that question, by deciding to just maintain the rate and await further data.
So right now, it's still an open question about sufficiently restrictive. You're not saying today that we've reached this level.
We're not saying, yeah, no, clearly we are just, what we decided to do is maintain the policy rate and await further data. We want to see convincing evidence, really, that we have reached the appropriate level, and then, we're seeing progress, and we welcome that. But, we need to see more progress
Beautiful.
before we'll be willing to reach that conclusion.
There we
And
go.
just on the
JP.
2024 projections, what's
Keep
behind that
speaking,
shallow
buddy.
path for interest rate cuts and the need for real rates to be 50
Colby
basis points
Smith.
higher?
Right, so.
Thank you, lady.
I would say it this way. First of all, real interest rates are positive now. They're meaningfully positive. And that's a good thing. We need policy to be restrictive so that we can get inflation down to target, okay? And we're gonna need that to remain to be the case for some time. So I think, remember that of course, the SEP is not a plan that is negotiated or discussed really as a plan. It's accumulation really, and what you see are the medians. It's accumulation of individual forecasts from 19 people, and then what you're seeing are the medians. So I wouldn't wanna, bestow
John,
upon it.
I
the
was
idea
short
that
on
that's
that
really a
trade.
plan.
I was
But
long
what it
moments
reflects, though,
before.
is
You need to be
that
paying attention to
economic
what I'm buying
activity
and
has been
selling.
stronger than we
If-
expected,
If
stronger
you
than I
even,
think
it
everyone
shouldn't
expected.
matter to you though. You
And
shouldn't be
so
copying my trades.
what you're seeing is this is what people believe as of now will be appropriate to achieve what we're looking to achieve, which is progress toward our,
I like that,
toward our
Michael.
inflation goal, as you see in the SEP.
Thanks. Let's go to Rachel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions.
How would you characterize the debate around another hike or holding steady? Is it discussion around lag times, fear of too much slowing,
Textbook
too
setup,
little
that is
slowing?
correct.
Could you walk us through what this disagreement was
Keep
about?
it simple,
at the meeting?
baby.
Yeah, so the proposal at the meeting was to maintain our current policy stance. And I think there was obviously unanimous support for that. But this, of course, is an SEP meeting, and so people write down what they think, and you have some, you saw, I think 7 wrote down no hike at this meeting, or between now and the end of the year, and I think 12 wrote down another single hike in one of the next 2 meetings.
Remember
we
that.
have between the end of the year. So it wasn't like we were arguing over that, people just stating their positions.
Yep.
And really what people are saying is, let's see how the data come in. You know, we wanna see, we wanna see. We wanna see that these good inflation readings that we've been seeing for the last 3 months, we wanna see that it's more than just 3 months, right? We wanna see, you know, the labor market report that we received, the last one that we received, was a good example of what we do wanna see. It was a combination of across a broad range of indicators, continuing a rebalancing of the labor market. So those are the 2 things, those are our 2 mandate variables, and that's the progress that we wanna see. But I think
Wow.
people, they wanna be
Horrible.
convinced, you know, they wanna be careful not to jump to a conclusion really one way or the other, but just be convinced that the data, you know, support that conclusion. And that's why, given how far we've come and how quickly we've come, we're actually in a position to be able to proceed carefully as we assess the incoming data
Market
and the
going
evolving
up.
outlooks and risks, and make these decisions meeting by meeting.
Testing.
And in your view, I know nothing has been decided yet, but what would one more hike at the end of the year do to the economy or to inflation? And on the other side, what would no hike do, if you could sort of game that out for us?
So, you know, you can make the argument that one hike one way or the other won't matter, but for us, we're trying, obviously as a group, it's a pretty tight cluster of where we think that policy stance might be, but we're always gonna be learning from data. You know, we've learned all through the course of the last year that actually we needed to go further than we had thought. If we go back a year and what we wrote down, it's actually gotten higher and higher. So we don't really know and that's why, again, we're in a position to proceed carefully at this point. A year ago, we proceeded pretty
NASDAQ
quickly to
dropping.
get rates up. Now we're fairly close, we think, to where we need to get. It's just a question of reaching the right stance. I wouldn't attribute huge importance to one hike in macroeconomic terms. Nonetheless, you know, we need to get to a place where we're confident that we have a stance that will bring inflation down to 2%
Beautiful.
over time.
Come on.
That's what we need to get to.
Break that EMA.
And we've been moving toward it as we've gotten closer to it.
This is what I'm
We've
looking
slowed
for.
the pace
Break
at which
below
we've
this.
moved. I think that was appropriate. And now that we're getting closer, we have the ability to proceed carefully.
Let's go to Steve.
My boy Steve.
Steve Leisman, CNBC. Mr. Chairman, I want to return to Colby's question here. What is it saying about the committee's view of the inflation dynamic in the economy that you achieve the same forecast inflation rate for next year, but need another 0.5 point of the funds rate on it? Does it tell us that the committee believes inflation to be more persistent, requires more medicine effectively? And I guess a related question is, if you're gonna project
Testing EMA.
a funds rate above the longer run rate for 4 years in a row, at what point do we start to think, hey, maybe the longer rate or the neutral rate is actually higher? Thank you.
So I guess I would point more to, rather than pointing to a sense of inflation having become more persistent, I wouldn't think that's not, we've seen inflation be more persistent over the course of the past year, but I wouldn't say that's something that's appeared in the recent data. It's more about stronger economic activity, I would say. So if I had to attribute one thing, again, we're picking medians here and trying to attribute one explanation, but I think broadly, stronger economic activity means
No
rates,
hesitation.
we have to do more with rates.
Reducing.
And that's what that meeting is telling you. In terms of what the neutral rate can be, you know, we know it by its works. We only know it by its works, really. We can't, you know, the model.
Dude.
And that the economy reacts, and again, that's another reason why we're moving carefully now, because there are lags here.
Federal
So
Reserve didn't pay the
that-
internet bill.
It may of course be that the neutral rate has risen. You do see people, you don't see the median moving, but you do see people raising their estimates of the neutral rate. And it's certainly plausible that the neutral rate is higher than the longer run rate. Remember, what we write down in the SEP is the longer run rate. It is certainly possible that,
Let's go.
that the neutral
it
rate
going,
at this
keep it
moment
going.
is higher than that. And that,
Dance
that's
for me,
part of the
SQQQ.
explanation
Dance
for
for me.
why
There
the
you
economy
go,
has been more
buddy.
resilient than expected.
Boom!
Howard Schneider with Reuters.
Wow, that was
Thank you.
beautiful.
So you've said several times,
Something that you guys should note, especially in comparison to my live trading sessions with the LPP team, my position size is still relatively pretty light. I'm staying at about 50 to even 40%. Why? Volatility is very high right now, which means that it comes at a greater form of risk. So yes, I am taking trades, quick ins, quick outs, but I'm reducing my position size when doing so. This is why I'm kind of lighthearted right now, because although I'm taking it seriously, it's light enough that it's not making me irrational. I don't know if you've ever struggled with this, but sometimes when your position is too aggressive, you almost have too much skin in the game. Just sharing with you my thoughts.
In other places, in, for example, job openings and in the jobs worker gap. You're also seeing supply side things. So that's happening. I would say, though, I still think, and I think broadly, people still think that there'll have to be some softening in the labor market that can come through more supply, as we've seen as well. Also, remember, the natural rate we think is coming down, which is a supply side thing, so that the gap between any given unemployment rate that's lower than that and the natural rate comes down. That's a way for that's a way for the labor market to achieve a better balance. So all of those things are happening. You're right, in the median forecast, we don't see a big increase in unemployment. We do see an increase. And, but that really is just playing forward the trends that we've been seeing. That is not guaranteed. There may come a time when unemployment goes up more than that, but that's really what we've been seeing, is progress without higher unemployment for now.
so just to boil that down for a second, we've gone from a very narrow path to a soft landing to something different. Would you call the soft landing now a baseline
Beautiful.
expectation?
No.
I have
no.
1,500 shares left.
I would
Very,
not do
very
that.
light now.
I would
Just
just
gonna let
say,
it run.
what would I say about that? I've always thought that the soft landing was a plausible outcome, that there was a path, really.
Do you see this?
To a soft
Coming
landing.
up
I
on our
thought that, and I've
previous
said that
resistance
since we
range.
lifted off.
Right?
It's also
Just making you
possible
aware.
that the
Why
path
am I
is
reducing?
narrowed
Because
and
we're
it's
approaching
widened,
previous
apparently.
support range. Patterns tend to
Ultimately,
repeat themselves. They don't always have to.
This may be decided by factors that are outside our control at the end of the day, but I do think it's possible.
Beautiful.
And, I also think, this is why we're in a position to move carefully again, that we will restore price stability. We know that we have to do that, and we know the public depends on us doing that, and we know that we have to do it so that we can achieve the kind of labor market that we all want to achieve, which is an extended period, sustained period of strong labor market conditions that benefit all. We know that. The fact that we've come this far lets us really proceed carefully, as I keep saying. So I think, that's the end we're trying to achieve. I wouldn't want to handicap the likelihood of it, though. It's not up to me to do that.
Nick Timros of the Wall Street Journal. Chair Powell, both you and Vice Chair Williams have indicated that sufficiently restrictive will be judged on a real rather than nominal basis, implying some scope for nominal rate cuts next year, provided further compelling evidence that price pressures will continue to subside. Is the FOMC focused on targeting a real level of policy restriction? And can you explain what would constitute enough evidence that will allow the FOMC to normalize the nominal stance of policy while keeping real policy settings sufficiently restrictive?
I mean, yes, we understand that it's a real rate that will matter and that needs to be sufficiently restrictive. Again, I would say, sufficiently restrictive only when you see it. It's not something you can arrive
Testing
at with
same
confidence
support.
in a model or in various estimates, And so what are we seeing?
Previous
We're
support range.
seeing through a combination of the unwinding of the pandemic-related demand and supply distortions and monetary policy's work in suppressing demand or alleviating very high demand, the combination of those two things is actually working. You're seeing, inflation coming down. It's principally now in goods, also in housing services. You begin to see effects of it in non-housing services as well. So we think that is working. And I think, as we've said, we want to reach that, we want to reach something that we're confident it gets us to that level. And I think confidence comes from seeing,
Beautiful.
enough data that you feel like, yes, okay, this feels like we can, for now, decide that this is the right level and just agree to stay here. We're not permanently deciding not to go higher, but we would, let's say if we get to that level. And then the question is, how long do you stay at that level? And that's a whole other set of questions. For now, the question is trying to find that level where we think we can stay there. And we haven't gotten to a point.
Dude.
Of confidence about that.
Sorry, guys.
That's the stage.
This year, and even then it seems possible the core PCE inflation could come in even lower than the median at 3.7%. Would you see a case to raise rates still if it turned out that you were going to achieve the same
big red
real rate
candle
this year because the decline in inflation proceeds somewhat better than you currently anticipate?
The decision that we make at each meeting, and certainly
My
at
last
the last two
1,500
meetings this
shares
year,
on
it's going to depend on
SPPQ.
the totality of all the data. So the inflation data, the labor market data, the growth data, the balance of risks and the other events that are happening out there. We take all of that into account. So I can't really answer a hypothetical about one piece of that. It'll be trying to reach a
I'm just
judgment
out.
over whether
I'll sell it.
we should move forward with another rate hike
One lucky
overall,
share.
and whether that would increase our
SQQQ,
confidence.
$8,849
This
on the
is an
day.
appropriate move, and it will help us be more confident that we've gotten to the level that we need to get to.
Testing same support range here for TQQQ. We'll see if we bounce. We don't need
Thanks, Chair
to.
Powell. Following up on Nick's question, actually, John Williams, the New York Fed
Yellow.
president, obviously, has said things to the effect of next year as we see inflation, kind of, again, to Nick's point, as we see inflation coming down, we're going to need to reduce interest rates to make sure that we're not squeezing the economy harder and harder over time. And I wonder if that's basically the logic that you apply, is that how you think about it? And then I also wonder, in the last press
Watch for
conference, you said
progress for
something to the
QQQ
effect of,
on the
it's a
downside.
quarter out those discussions, and people interpreted that to mean that you didn't see a possibility of a rate cut in the first half of next year. And I wonder if that was what you meant by that, or whether, how you're thinking about that timing.
No, when I answer these questions about hypotheticals about cutting, I'm never intending to send a signal about timing. I'm just answering them as the question is expressed. So please, I wouldn't want to be taken that way. Sorry, the first question was that how? Yeah, so we're, as we go into next year, that's the question we'll be asking is, taking into account lags and everything else we know about the economy and everything we know about monetary policy. The time will come at some point, and I'm not saying when, that it's appropriate to cut. Part of that may be that real rates are rising because inflation is coming down. Part of it just may be that it'll be all the factors that we see in the economy. And, that time will certainly come at some point. And what you see is us writing down, a year ahead estimates of what that might be. And, there's so much uncertainty around that. In the moment, we'll do what we think makes sense. No one will look back at this and say, hey, we made a plan. It's not like that at all. These are estimates made a year in advance that are highly uncertain, and that's how it is.
Thanks so much, Chair Powell. Neil Irwin with Axios. I wonder, how do you think about the question of whether the strong GDP growth we've been seeing is driven by excess demand versus supply-side factors, productivity, labor force growth? And relatedly, if GDP keeps coming in hot,
we're almost at that 30-minute margin.
Would that on its own be a reason to consider more tightening?
So on your first question, we're looking at GDP very, very carefully to try to understand really what's the direction of it, what's driving it, and it's a lot of consumer spending. The consumer's been very robust in spending. So That is, that's how we're looking at it. Sorry, your second question was?
There's GDP stays hot, but without inflation.
So I think the question will be, GDP is not a mandate, right? Maximum employment and price stability are the mandates. The question will be, is GDP, is the heat that we see in GDP, is it really a threat to our ability to get back to 2% inflation? That's gonna be the question. It's not,
So again, the thought process behind this trade, I mean, he's just answering that question. That's pretty basic. QQQ, which is NASDAQ, testing its support range. The reason I'm taking a trade right now is because we continue to consolidate within the same support and within the same resistance, right? Same resistance across the board, same support across the board. It doesn't mean that it has to bounce. I'm just explaining to you on why I took the trade. It was consolidating here, which it's consolidated there before. When it consolidated here last time, we gapped up, we got rejected at same resistance, and then we gapped right back down, right? That's when I took my SQQQ trade, making money on the way down. This is where I'm setting up, again, to make money as the NASDAQ market tries to recover. This does not mean that it has to. Let me make that very clear. The risk is that it breaks below, breaks its pattern, and then I have to cut losses. I will have to do that if we do get that break of pattern. Do not take a trade in which you cannot tolerate. I'm not here to be like other YouTubers that I'll try to convince you to take the same trade that I take. I never want you to take the same trade that I take. I want you to only take trades that make sense to you. And risk management is not something you avoid. Risk management is something that you do, right? Behind every single trade. So please be aware of that. If we see a break of pattern here, I will have no other choice but to cut losses on that position. And that's the risk that comes with opening that position. So please make sure that you understand that.
Of its economic effects to do our jobs. So, the thing about it is so uncertain. It will depend. The economic effects, it could affect, we've looked back at history, it could affect economic output, hiring, and inflation. But that's really going to depend on how broad it is and how long it's sustained for. And then it also depends on how quickly production can make up for lost production. So none of those things are known right now. It's very, very hard to know. So you just have to leave that uncertain and we'll be learning, I think, over the course of the next intermeeting period. It hasn't traditionally had much of a macroeconomic effect. Energy prices being higher, that is a significant thing. Energy prices being up can affect spending. It can affect over time. A sustained period of higher energy prices can affect consumer expectations about inflation. We tend to look through short-term volatility and look at core inflation. But so the question is, how long are higher prices sustained? We have to take those macroeconomic effects into account as well.
Don't copy me.
Those are some of mine. I'm not sure if I hit them all, but
my plan is not your plan.
You're coming into this with an economy that appears to have significant momentum, and that's what we start with. But we do have this collection of risks that you mentioned.
Craig Torres from
Beautiful.
Bloomberg News. I was a little surprised, Chair Powell, to hear you say that a soft landing is not a primary objective. This economy is seeing added supply in a way that could create long-term inflation stability. We have prime age labor force participation moving up where people can add skills. Workers want to work. We have a boom in manufacturing construction. We've had a decent spate of home building. And since inflation's coming down with strong GDP growth, we may have higher productivity. All are which good for the Fed's longer run target of low inflation. And if we lose that in a recession, aren't we opting for the awful hysteresis that we had in 2010? So are you taking this into account as you pursue policy? Thank you.
To begin, a soft landing is a primary objective, and I did not say otherwise. I mean, that's what we've been trying to achieve for all this time.
Period, buddy. Come on, Craig.
The real point, though, is the worst thing we can do is to fail to restore price stability, because the record is clear on that. If you don't restore price stability, inflation comes back, and you go through, you can have a long period where the economy is just very uncertain, and it'll affect growth, it'll affect all kinds of things. It can be a miserable period to have inflation constantly coming back and the Fed coming in and having to tighten again and again. So the best thing we can do for everyone, we believe, is to restore price stability. I think now, today, we actually, we have the ability to be careful at this point and move carefully, and that's what we're planning to do.
I like that.
So we fully appreciate the benefits of being able to continue what we see already, which is rebalancing in the labor market and inflation coming down without seeing, an important, large increase in unemployment, which has been typical of other tightening cycles.
What Jerome Powell just said is, I'll keep doing my job, you keep doing yours, Craig.
Hi, thank you. Chris Rugaber at Associated Press. When you look at the disinflation that has taken place so far, do you see it mostly as a result of what some economists are calling the low-hanging fruit, such as the unwinding of supply chain snarls and other pandemic disruptions, or is it more a broad disinflationary trend that involves most goods and services across the economy? Thank you.
So if I understood your question, I would say it this way. I think we knew from before when we lifted off, but certainly by the time we knew that bringing inflation back down was going to take, as I call it, the unwinding of these distortions to both supply and demand that happened because of the pandemic and the response. So that unwinding was going to be important. In addition, monetary policy was going to help. It was going to help supply side heal by cooling demand off, and just in general, a lot better aligning supply with demand. So those two forces were always going to be important. It's very hard to pull them apart. They work together. I do think both of them are at work now, and I think they're at work in a way that shows you the progress that we are seeing.
Watch for new lows here.
Michael McKee from Bloomberg Television and Radio. In June, you forecast a 5.
All right, I don't know what's going on. Looks like we bounced we got rejected right off that same resistance.
What would justify that last move? Because the median forecast is for lower inflation. And given all
has a great voice. Again, I don't want to take too much of your guys' time. You guys know my plan for TQQQ. I have my stop loss set here. I'm up 2,600 so far, 2,700 on the day. If it gets stop lossed out, I'll probably give back 1,500, so I'll end up at $1,000 in the green for TQQQ and $8,800 in the green for SQQQ. My SQQQ trade is already closed out, and I don't have an intention to reopen it. There's only 1 hour left in this market, and reminder, again, today as the FOMC meeting, markets can quickly shift. One of the things that I want to remind you is, again, I really hope that, first off, thank you for taking time and watching my live stream. This kind of gave you an inside look of what it's like for my live trading sessions every morning. I take some good trades, I take some bad trades, but the most important part is that I share my thought process behind every single trade. The whole point of these live sessions are for it to be a value for someone that's just getting started, to understand the do's and the don'ts, right? To have a reason why behind every action they choose to take. And that's exactly what we try to do every morning. Now, obviously, if market conditions are not favorable, it's going to be less likely for us to be able to take trades, as our job is not to force opportunity, but wait for it to present itself. So again, if you like what you saw today and you would like to join our LPP team, I work with one team and one team only. And again, that is the Learn Plan Profit Group. It is the second link in the description down below. It's a one-time payment, lifetime access, and you'll get to watch me trade live every single day. Right at market open, imagine waking up and being able to have access to these live sessions for 30 minutes to an hour every morning. Just like you saw today, I'm not telling you where to buy. I'm not telling you where to sell. This isn't I sell signals and you don't have to do any work. You have to put in all the work that you put in today. The whole idea is that you will get my inside look and my ideas and my thoughts behind the good and the bad of what the market is presenting. And that's the simple question that only you can answer. Would it be of value for you as someone that's just getting started to have access to these live sessions? If so, we're running our biggest sell. It's the second link in the description down below. And I hope to see you there tomorrow right at market open. If not, I respect that. I hope that you can drop a thumbs up, consider subscribing to the channel, and I hope that I can provide you more value within this YouTube channel. I really do appreciate you guys' time. If you have any questions, please do not hesitate to send me a direct message either via Discord or via Instagram, and that's the first or third link in the description down below. I am using the Webull trading application, which is the fifth link in the description down below, and don't forget about our M4 giveaway that is going to start on October 1st, and that is the fourth link in the description if you want to learn more about it. Everything is linked in the description, so please take 2 minutes and feel free to check it out. I appreciate your time. Like always, let's make sure that we end the year